coming live very shortly. There we go. And that 10-minute trader. There we go. And right there. 24. And as we want to go right here to YouTube. Hopefully we got 2 streams going on YouTube. Should be. 1 and 2. Woohoo! All right, that's working. All right, great. So let's get back to the way we were. That's 2024. You don't want to see trades from 2024. We want to see 2025 trades. There they are. Take a look. This is last week's. Last week's. All right, anyway. Let's get ready to roll. You guys, I always do post all my trades for you guys to follow along and to see exactly what it is that I am doing, just in case it's not crystal clear. So, what do we have here? Michael Stevens, what's going on here? Michael Stevens, we're investing in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week using only pre-qualified dividend stocks. And those, my friend, are companies that have consistently increased their dividend payments to their shareholders for at least 2 decades. Yes. Funny Mick, what's happening? You're talking about stocks. Absolutely, absolutely. Jets. Way to go, Jets. All right, Tuka. Koi da boy. All right, Koi da boy. All right, cool. We'll dig that one. David and Lisa, good evening. Taffy, good evening. Duca, good evening. Good evening, everyone. Okay, so let's get the ball rolling. Now, we left off last night with a bunch of stocks still hanging out, and we're going to take a look at who they are. Let's start out with, PPG. You know what? I was thinking to myself, right? I'm retired. I got nothing else to do. So I'm thinking to myself, why not, for the people who show up every single night, why not throw some stocks together, create a paper trading account specifically for you guys? So you guys give me stuff you want to take a look at, and just for the fun of it, we'll make trades here live at night, and then we'll see how they play out during the week. I think it's a cool idea. We'll do that this coming Monday. Okay, so this weekend, think about it. Okay, you want to see how it works. Well, great. Well, how about I create a paper trading account? We'll actually do trades here live. They will fill in the morning, so the next day we'll get to see what they filled at. And then throughout the week, we get to see how they play out. I think that's a cool idea. But anyway, let's move on. All right, so, look at this. We got Riot up on the screen. Riot is up on the screen, so let's see what Riot looks like. I mean, it's here. May as well. I actually own some of it. So here we go. Here's the high of the year, the low of the year, where it was a year ago, where it is now. Look at the motion. Up, down, up, down. Now she's going up. Okay, it's clear to see. What's the current price? Well, the current price is $8.38. So that being said, if we're going to be looking at the 8 stocks for weekly cash flow, okay, the weekly options are the key. Lone Wolf, that's how I learn. I need to see it happen. Well, I'm glad you like that idea, because the weeks progress, we'll see how it comes out. Haphazard, good evening. Steve Martinez, Ford looks good for the upcoming weeks. Okay, we'll take a gander at Ford a little later on. And a Jaeger Cat, Cool Ease. Hey, thanks, Jaeger Cat. Nicest thing someone said to me all week long. I'm going to take that as a compliment, as a matter of fact. Okay, so let's keep on going. Love your energy. You have amazing presentation skills. Cool beans, thank you. All right, so we're looking to do a simple, safe, predictable trade, 1%. Steve Martinez, thank you, Steve. Hey, radio guy, what's on? What's hoppin'? What's happening, radio guy? All right, anyway. I forgot where I was. Don't get old. It's not as glamorous as you might think, because you blank out every once in a while. Like, what day is it? What was I just saying? Oh, man. Anyway, thank you there, Stevie. So let's keep on moving. we see the way it's moving. Now, for those of you who don't know what I'm doing covered calls on pre-qualified dividend stocks. Well, basically that means is if the company is consistently profitable for more than 2 decades, I find that worthy of me investing my money. Okay? Now, if a company's not old enough, it just doesn't make sense to me. Now, that doesn't mean you guys can't buy whatever you want to buy. Now, we got somebody, somebody up in the live group making noise. That's okay. Who is it? Oh, Joe. Let me mute you here for a second, Joe. All right. Now, if you guys in the live, on the live Zoom call, if you want to, just unmute yourself and chime up anytime you guys have a question, that's part of the service you guys get. All right. So, where was I? All right, only companies that are consistently profitable. Because for me, it doesn't make sense to give my hard-earned money to a company that's 2 or 3 years old. Unless, of course, I'm looking for capital appreciation, which is a whole color of a different horse. Now, I got a Tootsie Roll for anyone who knows where that phrase came from. That's a color of a different horse. Anyway, besides the point. As I was saying, I'm looking for a simple, safe, predictable 1% per week. Because being retired at my point in life, I'm looking for cash flow. So cash flow, yes, great. If you're looking for capital appreciation, something you want to put your money, that's a horse of a different color. Haphazard, no, it's not. It's a color of a different horse. Or it is the horse of a different color. No, the color of a different horse. I think that's what it was. It's from The Wizard of Oz. Remember, they're in the palace and they get into a little chariot and they go through as they're going through the palace, okay, at Oz, okay, as you're going through the palace at Oz, the horse changes color, and somebody in it says, "Hey, that's a horse of a different color." No, that is the horse that is the color of a different horse. Anyway, because the horse kept changing colors each room it went into, so yeah, it was the color of a different horse. Anyway, it's colder than a well digger. Okay. Colder than okay. It's a horse of a different color. Okay. All right. Anyway, as I was saying, what was I saying? Oh, only companies that are profitable. I mean, think about it. You work a long time. No, most people work 30, 40, 50 years of their life, and they save pennies, nickels, dimes, dollars here and there, and they put it aside for their retirement. Okay, now in the old days, they had a strategy. You buy a good company and just hold on to it forever. Well, forever was like when you retire, then you turn around and sell it. Capital appreciation. Okay, well, that's not what I'm looking for. I'm already retired, which means every single one of my efforts in my investing has to give me a weekly cash flow. That's where weekly options come in. So we're looking at good companies. Boring. If you're looking for the new shiny object, the new shiny thing, yeah, this ain't it. This is slow, this is boring, this is monotonous, this is tedious, all those ugly words that you don't like. But it's consistent, and it's predictable, and it's profitable. Imagine that. It's simple, safe, predictable, and consistent. Even though the goal is 1% every week. Now, 1% every week comes to over 50% per year. Okay, well, that's normal. Nowadays, it's so weird that the numbers are just outrageous. I'm over 60% in one account, and we're not even halfway through the year yet. It's like, that hasn't happened in a very, very long time. And we're doing a very simple strategy. All right, so let's keep on going. I thought you were a journalist. No, I'm not a journalist. Anyway, let's keep on going. We got Riot up, so let's take a look at that. We are going to do a few samples so you guys can actually see it work. Now, if you're new here, the trading strategy I'm about to show you was created specifically for one person. Okay, now the person it was created for was my 9-year-old daughter back in 2008. She says, "Daddy, what are you doing?" And she said, "Can you teach me?" Now think about this. How am I? Okay, haphazard. Hold on a second. How am I supposed to teach a 9-year-old how to trade in the stock market when most adults don't even understand it? Okay, so it took me a while to come up with a trading strategy specifically for her. And it had to be simple, safe, predictable, consistent, and no way for her to lose. Okay, so haphazard, you're asking why not covered puts also? So I'm going to make no, it wasn't haphazard. That was Steven, I'm going to take a wild guess that you don't have 9-year-old children at home. That's just a wild guess. Okay? And if you do have 9-year-old children at home that understand, covered puts and covered calls and everything like that, awesome for you. My 9-year-old didn't understand the puts because they are a little confusing. Todd, will you invest for me? Keep a cut, win-win, I'll take 0.5% a week. You get 0.5% a week. That sounds awesome, Todd. Send me a number. Now, Todd, when I do that for people, but when I do, I require you to come to Florida, take me out for lunch, we chat, okay? And if we get along and everything goes well, yeah, maybe I will, okay? I don't take money from people I don't know. And I'm an old school kind of guy. A handshake and a stare in the eye, so eyeball to eyeball, belly to belly, that kind of deal. Yeah, I'm old school. Call me whatever you want. Really don't care. Because some of you young folks, you get really offended by us older people, and I don't know why that is. I don't feel old. Anyway, let's keep on going. So, DM me with your number. I'll give you a buzz. We'll chat. Okay, so as I was saying, Stephen Martinez, why not covered puts? Well, I'm here every night, 2.5 hours, sharing a trading strategy. It's simple, safe, predictable, all that stuff. For nothing. I'm not going to try to sell you anything. Do I do weddings? Yes, I do. I sing and I dance. But I'm not going to try to sell anyone anything. Okay, we're all adults here. We know how this works. Okay, I have a trading strategy. Gate. You want to join along? Yeah, it costs money, but I'm not trying to sell you anything. I'm just pointing out stuff. I'm also creating a video documentary for my children and my grandchildren. It's going to be attached to my estate, which means they can't get any of their inheritance unless they understand this. Because I'm not just going to give my children and my grandchildren a whole bunch of money and say, hey, here you go. CA, you write it down as SE. Okay. So, as I was saying, it's a simple strategy. It's safe. It's predictable. It's consistent. All right? So, can I write it down? Am I writing what down? All right, so as I was saying, I give away one trading strategy for free, and that is the covered call. Simple, safe, predictable, consistent, 1% a week. That's over 50% per year. Okay, I have to draw the line somewhere. I can't just blurt out everything I have. All right, so that being said, let's move on. First one we're going to look at tonight is going to be Riot. If you guys keep the questions down, we can look at a lot more stocks. But if you guys keep asking questions, well, then I have to get away from what we're here for and answer the questions. Because I do answer each and every individual question. Okay? Every single question I will answer. Just remember, there are 7 channels here. So that means 7 sets of questions that I have to go through in order to be able to, carry on a decent conversation with everyone. So keep that nice, neat, fun stuff. With a covered call, I am buying it at a certain price. I am selling it at a certain price by a certain date. That is a legal binding contract. You need 4 items in a contract to make it legal and binding. A beginning date, an ending date, consideration, money, consideration, and meeting of the minds. Technically that's what's called, meeting of the mind. It's an agreement between parties. It means I say something and you agree, you pay me money and we shake hands, blah, blah, blah. It's a contract. An option is a contract. Call option, put option, it is a contract. It has a beginning date, an ending date, and an agreement. And then money changes hands. All right, so what we're looking at here, if I'm buying it at 8.65, I want to sell the 8.50s and pick up 37 cents a share. Now, when I say I'm looking for 1% a week, well, 1% of this $8.38, 1% is only like 8.5 cents or 9 cents. That's not a lot. But it's 8 cents for every single share I buy. Now, if I buy 1,000 shares, well, that's 80 bucks or 800 bucks, 80 bucks, 80 bucks. If I buy 10,000, that's 800 bucks. If I buy 100,000, that's $8,000. Okay, 1% is 1%, no matter which way you look at it. Steve, American Airlines. Take a gander at it. Okay. So, that being said, this here is way more than 1%. So let's see what it looks like. However, before we jump the gun and automatically buy it just because the numbers look good, because the numbers do look good, okay, the chart tells us when is the right time to buy. Because I don't want to buy it at the high, and I don't want to buy it at the low. I want to buy it somewhere in between, preferably when she's coming down, she hits the bottom, she turns around, goes back up. That's where I want to buy, where she turns around and starts going back up. Because you can look at it in stocks. They do two things and only two things. They go up and they go down. And guess what they do after that? They go up and they go down. And amazing. It boggles my mind. Because after that, what do? They go up and they go down. That's it. Waiting for Ford to turn around. Yep, Steve, we got Ford written down. We're going to take a look at that in a minute. Okay. Oh, hello. Big Loud. Kohl's. Oh, take a look at Kohl's. I actually have some Kohl's. KSS and subbed. I'll follow up. Alrighty. ULTA. Kaibo TV. What the heck is ULTA? ULTA. We'll take a gander at it. Whether it's right or wrong, indifferent. It is what it is. All right, so anytime I look at a chart, I'm looking for 5 things. Now, it may sound complicated because people take a look at a chart and they say, what the heck's that? It is so simple. Now, remember, it was created for a 9-year-old. Now, when I tell you I'm looking for 5 things, you're automatically saying, what? Well, here we go. You ready? 5 things. Number 1, where's the high? Right there. Number 2, where's the low? Right there. Number 3, where was it a year ago? Right there. Number 4, where is it right now? Right there. And number 5, what's the motion of the ocean? Look at this. Down, up, down, up, down, up. Okay? It is that simple. Do not make it more complicated than it needs to be. Remember, it was created for a 9-year-old. 5 things. High, low, was, is. Where is it going? It takes 3 to 4 seconds to see that. Because if you're looking for the fine print, yeah, you could be there all day looking at that. But if you look at the greater points, where was it? Where is it? Where's the high? Where's the low? And what's the action? Up, down, up, down, up. Okay? Simplify it. Okay? What happened a year ago is really irrelevant to us today, but it gives us an idea of the flow. Okay, the high is here at 16. The low is here at 6. That's more than a 50% drop. 16 the high, 6 the low. Yeah, that's more like a 55, 60% difference between the top and the bottom. Okay, there's just numbers. Okay, so let's see what it looks like. Now, a year ago, we are at 1048. The high of the year was 1587, and that was the second week of November. The bottom of the year, towards the end of April, 614, towards the end of April. So let's zoom in to the last 30 days. 30 days ago today would be 428. There it is. It doesn't look that desirable now, does it? Down, up, down. No to riot for this week. So let's go look at something else. Okay, that being said, okay, you guys over here on the Zoom, looking forward to the spreadsheet. Oh, me too. I was playing with it today, and it's like, oh, this is awesome. When I was talking with the program, can you take this and layer it onto this? This way I can look at the movement of the asset and I can look at the cash flow of the asset all on one screen. Okay, she has it on two screens at the moment. It's like, yeah, I understand two of them, but I like this better. I like to look at one screen and say, oh, yeah, okay, I get it. Okay, so that's what she's doing tomorrow. So hopefully by end of Friday, it'll be all done. And that way, because the end of the month is coming. And then I got a bunch of, what do you call it? Data input. All right, anyway, let's go. HCA. Patricia Brown, thank you for that. Ernest. Good evening, Ernst. All right, so that's right. It's going to be a no. Next thing on my list is going to be PPG. Ooh, I like PPG. Here we go, PPG. Now remember, anytime I look at a chart, it's 3 to 4 seconds. Okay? High, low, is, look at this. Down, up, down, up. Okay, not that difficult, right? It doesn't look that bad, so what do the numbers look like? 110. Well, the 110 is going for 150. That's not 1%, because it's at 117 now. We take down 117, yeah, it's about 110. No, 110.55. 110.55 would be 110. Yeah, it would be 110. We take that 55 off of it, and it's 90. Okay, so it's going to work. You know, just get us by on 1%. Why not? So, do I like PPG? Yes, I do. Okay. Now, do the numbers work? Yeah, just barely, right at 1%. Okay. So, let's take a close look at the chart and see if it makes sense. A year ago, we're at 130. The top's at 135, and that's the end of September. Look where the bottom is. The second week of April. Look what she does. Okay. Now, here's the top. Here's the bottom. Look, she shoots up, pulls back, and tries to go up yesterday, but pulls back again today. So no real jumping out, buy me type scenario. So no to PPG for this week. Now, don't get me wrong. I do like PPG. I figure in a couple of weeks when she comes back down. Because look, here's the bottom here. Here's the top. All this space here. I consider that as treasure hunting. Let's call it treasure hunting. Because if you bought here, now it's up here, and you don't take your profits, all this, well, that's your own damn fault. I mean, think about it. Stocks go up, you take your profits. Stock comes back down, well, then you buy it and wait for it to go back up again. Because stocks go up, down all year long. Well, if you find a good company that you like PPG is a great company. It's just not the right time for me to buy it. It's just that simple. I mean, I'll look at it again when they have their dividend coming up, because dividend, anyway. Let's keep on going. Next on the list, opinion on URA. Oh, you are a piece of, or you are a pain in the, you are a, we could go all night. Oh, ULTA. What the heck is ULTA? ULTA. Ulta Beauty. 417. Okay, now before I even go any further, I don't trade this. So I'm going to go right to Yahoo Finance and see what's up with this. Ooh, excuse me. All right, right there. ULTA. ULTA. There we go. It's popping up. Hold on. Now, I always tell everybody, if you're going to be serious about investing, you really need to get your little fingers onto a financial website. Because although most brokerage has some good data, some good information, they don't have all the information. So here's Ultra Beauty. Now, I'm going to say no to ULTA, and there's a reason why. Forward dividend and yield. It has no dividend. The last dividend they had was in 2012. I'm going to say they're a little bit late to the party. No dividends, no thank you. I forgot to tell you that. All right, Concertine Joya. URA. Let's do that one. URA. Butthead. URA bonehead. You are a turd and a half. There's a lot of URAs here. Oh, look at that yield. Oh, wow, this is... I don't know. I might not last the night. It's getting sore. Okay, it has a yield of 3%. Okay. At least it has dividends. Well, let's see how many dividends it has. Now, I'm going to go over here where it says historical data. Okay, historical data gives me information on the data stream. Now, if you don't know what the data stream is, it's every single day the stock is traded, the high, the low, the open, the close, all that kind of nice, neat, fun stuff. And here we go. You ready? The date, the opening price of the day, the high of the day, the low of the day, the close of the day, and the amount of volume, how many shares have traded. Now, in the data stream, you will find every bit of information you want on the stock, but not the option. Well, we're going to get to that in a little bit. Let's go right to the dividends to see if this company is consistently profitable. Because when it comes to profitability, you got two choices. Okay? Now, I'm always going to go for the simple, easy choice. But some of you might want to go for the more complex choice. Okay? The choice I'm talking about is, how do you tell if the company's consistently profitable? Well, you could read 20 years of quarterly reports or annual reports. That will tell you. Yeah, baby, in the house. How you doing, brother? You could read all 20 years of annual reports. That will tell you. Or you could cheat like I do. No, okay, I'm a cheater. It is. I go directly to the dividend because the dividend is a portion of the company's profit. Do you like that one, Yimbe? Anyway, hold up. The dividend is a portion of the company's profits. So if the company is profitable, they give us a portion of the profits. That's the beauty of dividends. They share the profits with the investors. Okay, great. If those dividends increase every single year, think about it. If the money they're giving to the investors increases year after year after year, well, come on, logic, reason, common sense, okay, these things aren't taught in school anymore, but think about it. If they're increasing the money they give to the investors, they got to be more profitable year after year after year. Blah, blah, blah. Yes, I'm well aware that dividends get taxed differently. If you're worried about taxes, dude, you're kind of like the guy who goes to a Rolls Royce dealer and say, hey, great car. What kind of gas mileage it gets? If you have to ask a question like, hey, what kind of gas mileage does this Lamborghini get? If you got to ask, you can't afford it. If you're worried about taxes, someone has been lying to you. It is your God-given right to pay the least amount of taxes legally possible. And if you're paying any taxes at all, somebody's not telling you something. So when it comes to taxes, I always tell people, seek out a tax strategist or a tax planner. Not an accountant, not a CEO, not a bookkeeper. Someone who knows that big fat book and shows you how to set up your trading so you don't have to pay taxes legally. Don't misquote me, please. Okay? Legally. Okay? So, blah, blah, yep. Okay, so that being said, what was I saying before I got distracted? Let's get back to here. If the dividends consistently increase, more than likely they're more consistently profitable. Okay, so can you explain candle volume chart? Why different colors? Triple G. Hold that thought. I will get to it. Let me finish this point first, all right? All right, so what I'm looking for here, historical prices, okay? Dividends only. All right, I'm going to say no to this only because look at these numbers. Okay, 2010, which is only 15 years ago, not quite what I'm looking for, $2.33 a share. Okay, and then they decreased it by something like 60% down to 74 cents. Now in 2012. And then 2013, they decreased it even more to 16. Then they jumped to 97 to 27 to 93 to 30 to 5. Yeah, I'm going to say no to this company. No, no, and hell no. Okay, so GG. I'm going to call you GG. That's my favorite aunt. My favorite aunt was Auntie GG. All right, so let's take a look at this. Okay, so you want to know candlesticks and what do they mean and why the different colors. All right, so let's see if I can make this quick because most people already know this. Don't be bashful. Don't be shy. Okay, I didn't know it at what point. People don't know these things until they ask. Ask, you shall receive. Matthew 24. Here we go. A candle. We all know a candle has a wick. Well, these have two wicks. One at the top, one at the bottom. Okay, the body of the candle. See, sometimes it's different. Sometimes it's big. Sometimes it's small. And sometimes it's big. Let me explain all the numbers. Are you ready? Here we go. 5 numbers. You can see a lot of fives. A lot of fives. 5 numbers. You ready? The top of the wick is the high price of the day. The bottom of the wick is the low price of the day. Okay? Now you have the body of the wick. Some's green and some's red. Okay? A green day is an up day. Okay? Starts, closes. Okay? The bottom horizontal line on a green day is the opening price. The top line on a green day, the top horizontal line on a green day, is the closing price of the day. Now, you take red, which is the opposite. The top horizontal line on a candle is the opening of the day, and the bottom horizontal line on the candle is the closing of the day. Okay? It started high and it went down. A down day. The green, it started low and it went up. An up day. Okay? Remember I said there was 5? Okay. High, low, open, close. Now, the distance between the top wick, the top of the top wick, and the bottom of the bottom wick is called the range. How much range did it have for the day? That number is right here. Okay? Date, D is date. O is open. H is high of the day. L is the low of the day. C is the close of the day. And R is the range. How many dollars and cents did it move that day? So let's pick one number. Okay, this one right here. 3/11 to the 11th of March. This thing moved $17.82 in one day. Okay, so let's go over to here. This day here, March 4th, happy birthday, Lisa. March 4th, the range was $9.77 a day. So there's 5 numbers you're reading. The opening, the high. Wow, this is getting old stuff for the birds. Anyway, let's keep going. All right, Alta, URA. What is URA? A global ETF. Okay, this is what I say. I like to look at the chart, and I want to look at 5 things. The high is today. I do not buy anything at the high. That's the time to be selling. Okay, I like it when it hits high, right? Because it tells me when it's going to turn around and come back down again. All right, I don't read that language, whichever one that is, CC. Sorry. Ish mi amor. All right, so let's keep on going. Ooh, somebody wants to take a look at HCA. What is HCA? Hydro. Hey, good evening. What's happening?
Hey, what's up? Your second channel, we're not seeing the chart.
The second channel. Second channel.
On YouTube.
Uh-oh. Is that me standing in front of it, or is that just the screen itself?
That's just the screen itself with all your levels and
Okay.
and whistles and everything. We're not seeing the actual chart.
All right, well, let's go take a gander at it. Why aren't we seeing this? Dun, 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 dun. Give me a second. That's 20. You know what? Let's get right there, and come on. YouTube right there. Gotta get loose. Come on. Where are we going? Okay, live. Mean this one right here? Okay. Alright, well, let's go take a gander at it. Why aren't we seeing
I just see your audio mix and everything.
That's what it is. Okay. Yeah. I got it. Hold that thought. Right there, and come on. YouTube right there. Give me 1 second. I almost got it. Gotta get loose. Come on. There we go. Get live. Meet this one right here. Okay. Come on, I just changed it. That's what it is. Okay, yeah. I got it. Hold that thought. Why am I not? Give me 1 second, I almost got it. Almost got it. I give it a couple more seconds. I don't know. It takes a while because, as far as I understand it, it goes from my computer to my router, out of space to where it's going. Is that a loop? Doing the same thing over and over again?
It's like 3. I don't know. It's like 5 to 10 seconds behind you.
Okay, something ain't working right there. Almost got it. Give it a couple more seconds. Oh, come on. It takes a while because, as far as I understand it, it goes from. Did I already say that? My computer to my router, out of space to where it's going. Display. Is that a loop? Doing the same thing over and over again? No, it's not a loop because I said that once. Okay, so it should fix eventually. All right, it should fix eventually. Let's get back to what we're doing. Thank you. All right, what the hell am I doing there? All right, let's get out of that one and back to where we were. All right, so anyway, no to URA. What do we have coming up next? CC is speaking Spanish. He is asking if you will follow him so that he can support you. He wants me to follow him. Okay, fine. Send me a request and I'll follow him and see if I can help out. It's time, traveler. Could very well be. All right, somebody wants to take a look at LCTX. What the heck is that? LCTX. Never heard of it. Usually, LCTX. If I've never heard of it, usually going to be a no. Imagine that. It is a no. Uh-oh. SLB. I knew that one. Schlumberger. I knew that one. SLB. SLB. Schlumberger. I like Schlumberger. They are a dividend king. Oh, look at that. I want to check that out. Here's the high, the low, where it was, where it is. Look at this. Sideways, down, and then up. Okay, cool. What is it going for? Well, the numbers for Schlumberger is 35.58. So the 33.58. 33.58. Going for 72. All right, well, that makes sense. Well, let's take a look at the numbers. Now, let's take a look at the chart. We just looked at the numbers. Let's look at the chart. All right. A year ago, we opened up at 46.62. The high of the year was 50.94, and that was in the middle of July. Look where the bottom is. April 31.11. Okay. All right, here we go. Down, up, down, up, down, up. So we have 2 days to the upside right here. I'm going to zoom into that a little closer so you get a better view of it. The last 30 days is right there. All right, here we go. Here's the last 30 days. Okay, down, up, down. Now she get 2 days to the upside. Higher highs and higher lows. Blah, blah. Have a nice night. All right. Caleb. We're going to take a look at Microsoft next. So ask yourself a couple of questions. Number one, do I like Schlumberger? Well, a lot of you probably scratching your head thinking, who the hell are they? Well, think about it. But they are a dividend king, which means they have increased their dividends to their shareholders for more than 5 decades. That's 50 years. So I have to admit, I have no idea who they are, but they are a dividend king. So yeah, I do invest with them when the numbers look good. Well, look at the 3350s. The 3350s are going for 72, which is more than 2%. So let's see what it looks like. But before we do, let's take a look at the seasonality chart. Okay, so I like to look at 4 charts. The 1 year, the 90-day, the 30-day, and then something that's called the seasonality chart. Now, a lot of you probably never heard of that, because I started trading before there was such a thing called the seasonality chart. Well, it tells you, or it shows you, what does a company normally do during the seasons. Okay, winter, spring, summer, fall, first quarter, second quarter, third quarter, fourth quarter, so on and so forth. Because you got to admit, people down in Florida do not put their heaters on in June and July. And people up in Alaska and in New England, Michigan and Oregon, Washington, they don't put their air conditioners on in the winter. So yes, a different season affects the companies. So let's take a look. Now, the blue, all right, let me start over again. All the way to the left, January 1st, all the way to the right, December 31st. The blue line represents this movement for this year. The red line is 10 years worth of data. Now, on this chart, I can set it to whatever I want. I think 20 years is too much information, and I think 5 years is not enough, so I like somewhere in the middle, 10 years. Well, for the last 10 years, it also makes the math easier, 8 out of 10, it's 80%. Right, so anyway, look at beginning of the year, she drops down in the first quarter. The second quarter, she jumps up. Third quarter, she goes sideways. In the fourth quarter, she goes up. Well, it's not guaranteed, but it gives you a good idea. Business as usual. Well, look at right here. This is where we are now, the end of May, beginning of June. So I want to highlight that area and zoom in to see what does this company normally do this time of year. Well, I don't know about highlight that area and zoom in to see what does this company normally do this time of year. Well, I don't know about you, but look at that. That's definitely going to the upside. Nicely, too, I might add. Okay, the stock is right here. Definitely, this time of year, this stock has a 10. Only 3 guarantees in life. Only 3. But everything looks good so far, so let's see what a covered call on Schlumberger would look like. Let's get rid of that. Let's change this to covered stock. And let's take a look at that 3350 right there, 3350. Now, I'm just going to show you one contract because I don't want to scare you away with big numbers, and it makes it easier to do the math. Okay, so if I say it's going to cost this, you'll know, so, oh, right off the top of your head, oh, I get 4 of those. Well, it's going to cost it, oh, I can get 7 of those. So I'm going to tell you how much this trade is going to be, and you're going to decide whether or not you can do 1, 2, 20, 35, whatever. We're all different, but I'm looking for 1%. All right, anyway. Buy 1, covered call, SLB 100. That is the weeklies. 6, June 25. Well, that's the date for next Friday, because this option here is going to expire next Friday. So the $33.50 call option against the SLB stock at the market to open to open. Basically, that means I'm going to make this profit and it's going to cost me that much. Now, remember, hold on a second. Remember when I said simple, safe, predictable, consistent 1% per week. Okay, so here's where I fill you in. When I say simple, the easiest trading strategy there is just to buy and sell the stocks. Well, buying the stocks, you have no idea what your profit's going to be. So that didn't work. Well, there are different trading strategies. The next simplest strategy is the covered call, where you buy the stock and you sell the option at the exact same time. It's also predictable because I know exactly what I'm going to make before I even do the trade. Now, most people just buy a stock and wait for it to go up or wait for it to go down, wait for it to move. Well, I don't have to do that with this trade. It's simple, it's easy. I'm buying it at this price, okay? I'm selling it at this price. The rest of it is just details. Okay, I'm buying it at $33.58. I'm selling it at $33.50. I'm collecting $48 per contract, and one contract is going to cost me $3,300. Okay, great. Well, let's hold on a second. Let's take a look with the calculator, see what kind of rate of return that is. Now, this is not going to factor in whether or not you have a margin account or not. This is just considering if you have all cash. That's probably the easiest way to do it so you don't get confused. Okay, first and foremost, we're going to take the profit, $48. Now, I know what I'm going to make before I even make it. Before I even do the trade, $48. Okay, next. Remember what I said? Simple. It's a simple trade. Safe. It is so safe they actually allow you to do it in a IRA. It is safe enough for the government to approve you to do it in your IRA. Okay, great, fine. Simple, safe, predictable. I know what I'm going to get. Consistent. Well, consistency comes with weekly option, which means 30 May, well, that's this Friday. 6 June, that's next Friday. 13 June, that's 2 Fridays away. Every single Friday, I can do one of these trades. Every single week. That's why dividend investing for weekly cash flow came from. The 10-minute trader came from. It should only take you 10 minutes to do this. Okay? It may be a lot at the moment because it's something new. It's something nobody ever does. Who invests for weekly cash flow? Nobody does. People buy something. Oh, what'd you get this year? Oh, what'd you make last year? No. Me and the people I know, what did you make this week? What's your average so far for this quarter? We talk differently with the people I hang out with because it's a different set of rules for us. It's the same stocks. The same stocks you like are the same stocks I like. I just trade them differently because I'm looking for cash flow. Oh, just say 960 hours, which is 40 days. Why am I saying 40 days? Okay, anyway. Wow, do I trade institutional order flow? No, I don't. Good evening, Antoine. How are you doing? What's your advice on focusing on only one pair? Don't do it. Is this for buying options or stocks? Actually, both options and stocks. What's your advice on focusing? I already did that one. What broker am I using? Charles Schwab. Felix, tomorrow looks good. Stock market will open high. Hopefully, will continue on Friday. Well, I hope so. All right, so what do we have here? Okay, so broken English. I'm not quite sure what you mean by exchange value. Steve, do you put a strike at the nearest to get called or one higher? I'd like to do one strike in the money or at the money. One of the other. Either at the money or one strike in the money. Broken English, interest. I have no idea what that means. Rocco, good evening. All right, Christopher, good evening. Chris, each day 24 hours. Okay. Broken English, be nice. Okay, will do. Rambone, how do you pick your dividend stocks and entry point? Oh my goodness. Rambone, you're going to love this. You ready? I hope you got a pencil and paper handy. Lipstick, mascara, write it on the bathroom wall. I don't know. Anyway, here we go. Dividend kings. Dividend aristocrats. dividend champions, dividend contenders, Warren Buffett's list. That 5 list right there will give you over 300 companies that are consistently profitable. Okay? Now, you've been here for a while. You see how I go. Okay? I look at the charts. I look at the numbers. If everything looks good, great. I'm going to buy it first thing in the morning. Do I have a set price? No. I'm going to buy it first thing in the morning. If the market opens at 9:30, at 9:31, I'm going to buy it. Do I care what the price is? No, I do not. Well, not really. If it gaps up really big, I'm not going to buy it. If it gaps up a little bit, yes, I will buy it. Within reason. But I will buy it first thing in the morning. Okay, so if I buy it at 9:31 a.m., I'm selling the option at 9:31 and a half. Okay, immediately. I honestly really don't care if the stock goes up or down. If it's in an upward trend, great. If it's in a sideward trend, great. If it's falling, I'm not going to buy it if it's falling. Okay? So, we're going to take a look at a few more and see how it works. All right, so let's finish this up. That changed. That was 48 a little while ago. Now it says 26. Now that's weird. Anyway. 34. Oh, that's why, because Schlumberger is actually trading at this moment in time. These numbers are changing, but these numbers are not changing. Okay, so the stock numbers are changing, right? But the option numbers are not changing. So it's going to be a little challenging for us to come up with real numbers. So they went to 24 hours. Now, some stocks trade 24 hours. Some of them don't. I don't do that because options aren't open 24 hours. And my, low battery, that's not good. I got to change some wiring here. Hold that thought. Can't have a low battery now, can we? Come on. Oh, wow. There we go. Now it's working. All right, so that being said, yeah, the numbers all changed. That's weird. Which means I'm going to have to change it now. 3450. All right, 3450. There we go. And just one contract at the market. And here it goes. So it's going to change. Yeah, it's going to change a little bit. Look at that. So we're going to buy one covered call, SLB 100. That's the weekly. 6 June 25 means it's going to expire next Friday. 34 and a half. The stock is moving at the moment. Okay. SLB at the market to open. Now, 85.50 is the new trade. Is the new number. Well, as the days go, you're going to notice this. This is going to drive some people nuts. As soon as you turn on your numbers change, and it does nothing but aggravate you, because the numbers change constantly while the market is open. So the numbers are changing up here. See, now the numbers change different again. All right, is what it is. So let's check out the numbers. Bring my calculator back up here. Clear. Now, maximum profit here is 85.50. All right, so 85.50 divided by right here. The cost of the trade, including commissions and fees, $33.65. Now, $33.65, you're not really spending it. I like to think of it as investing it. 33. What number did I just say? 65. And that equals a grand total of 2.5%. 2.5. Okay, you have any idea how much 2.5% a week comes to at the end of the year? So just multiply it by 52 because there's 52 weeks in a year. I'm saying 93%. 93. What do you think? 132. I guess I was a little wrong. Yeah, 2. All right, anyway. 132% annualized. Well, that's not what we're looking to do. We're looking to do weekly. We're looking to do, 5 or 10 minutes a day. Because 5 or 10 minutes a day at 1%, depending on how big your account is. If you got a $50,000 account, well, 1% a week is $500 a week. 1 hour of your time, 10 minutes a day. 5 days, 10 minutes a day. Well, that's 50 minutes. So let's say you're setting up your computer, let's say an hour. An hour a week for $500. Well, that sounds pretty good. Well, now, when you get older and you get more money, because my assumption, after working 30, 40, 50 years of your life, you should have 6 digits at least. 100 grand, 200 grand, something like that. If you have less, I feel sorry for you, but still, 50% per year is possible. All right, let's keep on keeping on. Let's keep on keeping on. Got to make the best of a bad situation ever since that day. All right, here we go. Schlumberger, not bad. I'm going to write that one down. All right, SLB 2.5%. Nice. All right, what else do we have? What other confluences? I have no idea what a confluence is. Okay, Mitchell. Okay, I'm admitting defeat, Mitchell. I have no idea what a confluence is. And I'm not going to look it up. Okay, what other confluences do you add to technical analysis? I have 2 and only 2 criteria for my stocks. Are you ready? Number 1, consistency of profitability. 2 decades, okay? Number 1, consistency of profitability. 2 decades. Number 2, weekly options. That's it. That's the only 2 criteria I have. Only 2. The way I look at it is, if a company is consistently profitable for more than 2 decades, well, I'm assuming they know what they're doing. Now, I don't like the idea. Now, I did when I was younger, but as you evolve, isn't that weird? As you evolve in your life, okay, you got to admit, you start out as a child, then you go to an adolescent, then you go to a teenager, then you go to a young adult, and then you go to a family figure. Then after that, you get to an empty nester, and then you get to a retirement. Okay, each stage of your life, you have a different way of looking at things. Okay, at this point in my life, I'm not chasing money anymore. I'm just maintaining the status quo for me. Anyway, but key factor for me is consistency of profitability, because my bills come to you every month. Now, my account does grow very slowly, because most of the money I make on a weekly basis goes to paying my bills. And it allows me to help out my kids and my mother and my grandkid. Anyway, so that being said, I don't have the luxury of being wrong. So I make sure every investment I do is something that I want to pass along to my kids. And the consistency of cash flow is the major goal that I'm looking for. Along with, I'd say, cash flow and preservation of my capital. I think those go hand in hand. Okay? All right. Anyway, SLB. Interesting. Next. Felix, SLB. Okay, yep. What if I only have $50? Asking for a friend. Okay, so if you only have $50, guess what? Okay, I didn't start investing until I was in my 40s. So I'm hoping you're younger than 40. But getting started, you can start with $5. You have to make a decision to start, number 1. Because we're the only species on the planet that's got to pay to live here. So when you reach retirement, you got to figure out where the hell your money coming from. And that's a big question. Where is your money coming from? How safe is it? Is it consistently giving you enough to live comfortably? Well, these are all very important questions. Because once you reach here, retirement, you got 2 choices. You're going to either do it yourself, or you're going to give it to someone else to do for you. And I can pretty much guarantee nobody has as much interest in your money as you do. Okay, let's keep on progressing. Oh, if that makes sense. Okay. Confluence is the things that align with each other for your bias. Oh, like indicators, prices, news, all align for bias. Oh, I get it. Confluence. Not a word I'd ever use, but hey, all right. The coming together of all things to help me make up my mind. That's a better way of saying it. The coming together of all things. Confluence. The word of the day, confluence. Coming together of all things to make up your mind. All right, I like it. Consistency of profitability. Weekly options. That's it. Hey, Hugh, you're here. If that makes sense. Yes, it does. All right. TikTok, what questions do you have for me? Rambone. The rambone's connected to the knee bone. The knee bone. All righty. Herning. Okay, Broken Angel, I have no idea what herning means. Interest value off item. Interest, okay. Did I look at AAL, American Airlines? Well, let's check it out. American Airlines, AAL. Here we go. Okay, 3 to 4 seconds. You ready? High, low, was, is, down, up, down, up. Easy, right? $11.43. Come on, we all know the closest strike price to $11.43. The $11.50. The $11.50 is going for 31 cents. Well, that's well over 2%. We just saw 2%. 2% a week is over 100% a year. But the big question is, well, there's a couple of big questions. Number one, is it the right time to buy? Number two, do I like the company? Well, let's find out. A year ago, $13.64. We dropped all the way down to 9 before we jumped up to the high of the... I hate doing that. Damn it. I'll do that every once in a while. The high of the year, the end of January, and that was 1910. Wow. So the high of the year is 1910. Okay, the bottom, the end of March, 836. All right. Well, look what happened a month ago. Up, down, up. 2 days to the upside. Now, remember I tell you, I love 2 days to the upside after some profit taking. Well, here's your bottom here. 850 jumps up to 1250. Now, it doesn't sound like a lot, but think about it. $8.50, bottom right here, to $12.50, the top right there. That's a $4 move. I know, it doesn't sound like a lot. It's only $4. But everything is in context. So let's check out the context. Well, what is it? Well, what is the comparison on a $4 move on an $8.50 stock? Because it was here. This is the bottom, $8.50. You had an opportunity a month ago to buy this at $8.50. That's the bottom. And somebody did buy it at $8.50. And then it jumped up $4. Now, $4 on an $8.50 stock is tiny bit below 50%. It's almost a 50% increase in 1, 2, 3, 4, 5 weeks. 50% increase in 5 weeks. So here's a question. If you bought something and it jumped 50% in 5 weeks, would you take the profit? Because the funny thing about profits, you ready? Here we go. Funny thing about profits. Nobody ever went broke taking profits. Think about it. If you take profits every week, are you going to go broke? No. Nobody ever went broke taking profits. It's not my saying. I stole it from someone else, and I forget who that was. But it was so cool, I had to stop everything I was doing. I had to write it down. That's a cool one. Nobody ever went broke taking profits. And number two, it's not a profit until you take it. That's mine. That one's mine. It's not a profit until you take it. Alrighty? So, thing jumps up almost 50%, profit taking, now 2 days to the upside. Tuesday and today. Both are higher than this bottom here. So let's look at the last 30 days. So the last 30 days, no, it's not that different. Same thing. Up, down, up. So does it make sense? Well, number one, do you like American Airlines? That's a good question. Okay, number two, are you willing to buy it at this current price and hold on to it until it hits your target and keep giving you things to do? I mean, tragedy, giving you something to do and you're making money from it. Think about it. I buy it at this price, $11.43. And then this week, I sell somebody the rights to buy it from me at $11.50. It's only a 7-cent difference. But look at what I'm collecting. 31 cents a share. Well, 31 cents a share, let's see what that means. Okay, hold on. Bring a calculator. Okay, 31 cents a share on a $11.43 stock. So I divide it by $11.43. And that gives me a grand total of 2.7%. Now we saw what 2.7% is. That's over 130, 140% for the year at 2.7. But it always comes back to that big question. Does it make sense? Do I like this company? Am I willing to buy it and do a covered call every week until it hits my target price? And even then, do I still want to get rid of it if it's still going to give me more than 1% every week? Now, I've been holding on to a stock. Now, before somebody taught me about rolling forward, the longest I ever held onto something was 9 months. Longest I've ever held anything was 9 months. Because I didn't know about rolling forward until somebody pointed it out. I said, oh my God, that's a game changer. And it actually was. It's like a simple strategy changed the way I traded because it was something I didn't know. Well, now that I do know it, well, my profits were more consistent. Well, that works for me. All right, anyway. So, American Airlines, 2.7. I'm going to write that one down. 2.7. Nice. Added to all the other. We have like 12 different companies that came up this week. They look really sweet. All right, so that being, let's do one. Let's do an 11.50 on American Airlines. 11.50 right there. Okay, one contract on the market. And here's Johnny. Here we go. Bill Tone is one. Well, today, folks, you got buy one covered call American Airlines 100. 6 June 25. That's next Friday. The $11.50 call option against the stock AAL, American Airlines, at the market to open. Maximum profit, $15. Ooh, that sucks. But it's only cost me $1,100. Well, let's do some math. Okay, $15 divide 1,135. 1.3%. Well, I can live at 1.3% because 1.3% is over 50% per year. Actually, it's over 60% per year. And I'm okay with that. Okay, you got to decide what you want. Okay, do you want cash flow? Well, you're in the right place. If you want capital appreciation, you're basically just wasting your time here. Because I don't do capital appreciation. Okay, I'm 61, I'm retired, I'm talking to the top retired folks and those that want cash flow as opposed to capital growth. Because there's a huge difference. Okay, because the trading strategies are totally different. Okay, I'm looking for cash flow. Okay, if you're looking for capital appreciation, you buy a stock for $10, 20 years later it's at 150. Yeah, I don't do that. Okay, I'm not delusional thinking I'm going to live long enough to see some of these companies actually be profitable enough for me to stop working today. No. If I bought these capital appreciation stocks, I'd be still working. And I don't want to work. And you can't make me. I don't want to work. I want to bang on the drums all day. All right, so let's get out of that. Let's get out of that. Let's get out of this. And let's find something else. So American Airlines looked pretty good. Oh, what is it selling for? American Airlines is selling for $11.43. To use hours. I have no idea what that means, to use hours. How many of those shirts do I own? Believe it or not, I got 6 of these. All say the exact same thing. The funny thing is, 4 of them, you got dark green, dark blue, black, and dark gray. They all look the exact same on camera. You get the red one, the blue one. That's easy. You get the black, dark blue, dark green, and dark gray. Those 4 all look the exact same. Anyway. Alrighty, Michael. Mike Jeff wants an answer. What is my strategy? Oh, my strategy is dividend capturing 2.0. There you go, Jeff. You got your answer. Mitchell, do you tend to look for your trade setups more from a fundamental analysis or technical analysis? Mitchell, that's actually a very good question. It is. Do I look at the fundamental side or technical analysis side? Well, I'm going to tell you a little bit of both, and here's the reasoning. Sorry, I'm just not used to talking so much, and it does bother my voice box. All right, so Mitchell, you ready? I use fundamental in order to isolate which companies I like. Okay? Dividend Kings. That's 50 years of increased dividends to the shareholders. So the numbers actually make sense. Dividend Aristocrats, 25 years of consistent profitability. Same thing. You have to have a certain numbers. Okay? The fundamental. That's where the fundamental comes in. Picking the companies. Okay? Once you pick the companies, there's over 10,000. So every single week I check. Okay, this week there was 10,046 different companies. Okay, that's a lot. So 10,046, I'm only looking at about 300 because only 300 fit my criteria. And one of that criteria is basically fundamental because you can't be a dividend king, you can't be in a dividend aristocrat unless you meet certain criteria. Okay? So yeah. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those all pass the fundamentals. Okay? So next comes the technical analysis. Okay? Now, my technical analysis is, let's say, 2nd grade level. What do I mean? Here's the high, here's the low. Look, it's going up, now it's coming down. That's my technical analysis. Because technically, it's two. And when they're done going up, they stop. They turn around and then they drop. And then they drop until they're done dropping. Okay? You got one person. You got the market maker. He wakes up in the morning and he says, well, that's fine. Let's get these numbers. We opened up today at 1170 and we hit a high of 1174 and a low of 1139. I think tomorrow, Thursday, we're going to open up at 1175. One person makes that decision where we start from in the day. It's called the market maker. He decides the opening price of the day. Everything else is on you and me because we keep buying until we're done buying. Like if it was worth 15 or 16 bucks, it would be there. Okay, we're the buyers and sellers. We say, yeah, no, it ain't worth 12 bucks. No, it ain't worth 12.50. Okay? We decide how high it's going to go, and we decide how low it's going to go. Because once it gets down to a certain point, we say, holy cow, American Airlines at 10 bucks? Yeah, I'm going to buy some. We make that decision. There's only one person who starts us. He's the guy with the starting pistol. He says, all right, 11.75, go! And then we just decide, buy, sell, all the day. We make up this crap. It's the market maker who starts the starting point every day. So where it goes, how high it goes, how low it goes, that's up to you and I. Okay, you jump in when you think it's right. You jump out when you think it's right. It's basically that simple. So I have certain rules that I set up for my daughter. Okay, 30-day low, 30-day high. There's going to be profit taking. Well, there it is. As soon as the profit taking is done, as soon as it's done coming down, it's going to turn around and go back up. Now, if it goes up 2 days in a row, great. On the third day, if it goes up, if it opened higher or the same, that's where I will jump in. Okay, those are my rules. So yeah, I do technical analysis and I do fundamental analysis. Fundamental to get your foot in the door. Well, great. Now that it's there, I don't need to worry about fundamentals anymore. Now it's just technical because the stocks I look at already passed the fundamental test. That was a long answer, wasn't it? Uh-oh. Arika wants to take a look at University of New Hampshire, UNH. Universal, wasn't it? Universal Health, something like that. UNH. Yeah, oh, United Health Group. Yeah. Holy cow, I'm going to say no. No, I don't buy stocks over $600. Look at this thing. Like $700 a couple of months ago. Now it's down to $300. Why is that appealing? That's more than a 50% drop. But think about it. Do you like it? Well, let's take a look. A year ago, we're at 503. The high of the year is 619. Definitely out of my range. I don't buy stocks over 250. Because here's the thing, okay? This is just my interpretation. If I can make 1 or 2% on a $20 stock, fine. Well, why do I want to take a look at a $600 stock and make 1 or 2%? It's the same amount of money. Think about it. 1% of $600 and 1% of $200, it's still 1%. Granted, yes, I know it's more money, but think of it this way. I could buy 1 share at $600, and 1% would be $6. Okay, great. Now, that same $600, I can buy 30 shares at 20. Okay, and 1% of that is still $60. It's still the exact same amount of money. So whether it's a $600 stock or a $20 stock, 1% is 1% when you're starting out with the same amount of money. Okay, 1% return is a 1% return. All right, the bottom just recently. So ask yourself this. Okay, a month ago, we're up at 609. Gaps down, keeps on dropping, gaps down again, okay? And now she hits 250. She goes from 600 to 250. That's a big drop. Okay, she retraced 3 days, pulled back down again. It's not something that makes me comfortable. Okay, but you do have your uptrend. Now, what does this thing normally do this time of year? Well, it looks like she's just going to go a little bit sideways. No big moves up, no big moves down. Do you like the company? Do you like it at $300 a share? It's a 50% discount because it was $600 a couple of months ago. Do you like it? I've never bought this. I don't do stocks over $250. Sorry. However much money you think I have, I don't. I live comfortably, okay? I have no need for a yacht. I can't say that, but thinking of getting one. But I don't live on the water. I don't have a mansion. I don't drive a Lamborghini. I have no use for that kind of stuff. I'm a simple person. Anyway, let's keep on keeping on. I'm not doing this one. What am I doing? I want to consolidate this. Back to that. And back to here. Okay, here we go. Next, Broken English wants to take a look at US Deal. Probably you can't, but I can using hours with budget to lost herring to increase herring. I have no idea what that means. quarter hour of 10 minutes. Okay, broken English 12. Alrighty. What do we have over here? What's my strategy? I want answer. Okay, good for you. Mitchell, do you tend to look at your trades? I already did that one. UNH, we did that one. If your call is in the money, do you roll over or let it go? Felix, it's always a numbers game. Always a numbers game. If I get a good company, right, and it's paying me 1%, 2%, 3% every single week, and I have the opportunity to either let it go or to collect another 1%, 2%, or 3%, I'll more than likely take the 1%, 2%, or 3%. Okay, it's always going to be a numbers game. Where's my money now? Is it safe? What is the strategy? What is in front of me now? Now, see, the funny thing is, people ask me all the time, well, what do you do if this happens? Well, I can't tell you what I'm going to do on a Friday afternoon because options expire on a Friday afternoon, which means I take all my positions from this week and move them into next week on Friday afternoon. And I have no idea what's going to happen between the time I buy them Monday morning and, well, in this case, Tuesday morning and Friday afternoon. Because Friday afternoon at 2:30 we sign in and see what's happening. Now we jump on every morning, 9 o'clock, to take a look at what happened the day before. Now I got a morning trading group. Tomorrow morning we will jump on and see everything that happened today, and that's Thursday, which means we got 1 day left. And Friday afternoon we jump on and we take a look at, great, what did I buy it for? Where's it at now? What is the best strategy? What is the best play to make to not lose money, to have cash flow come in, and to be able to sleep comfortably at night? Because I remember a couple times in the past, one day I lost $12,000 in one day because I didn't know something. I didn't know you could sell an option for less than you paid for it. I didn't know that. So I bought it and it went down and I was like, oh fuck, it kept going down. And I didn't sell it because I didn't think you could. Yeah, okay. So yeah, I made a lot of mistakes. So that being said, next, what is next? Broken English wants to take a look at U.S. Steel. We'll take a look at U.S. Steel in a second. Mike Jeff acting like he's the boss. Hey, Mike Jeff, way to go. Ain't going to help you out, though. Okay, Mike Jeff, what about Bitcoin? Yep, hell no. Bitcoin, there's no way. All right, Mike Jeff, there's no way possible you can get a simple, safe, predictable, consistent 1% a week with Bitcoin without sitting in front of the computer staring at it every single day or handing over the reins to a computer. And I'm too old school for that. I've seen too many movies where that just doesn't end good. All right? Next. Dude, read the comments. He doesn't trade crypto. Thank you, Hugh. I would like to know how to get started. Jose Perez, ¿qué pasa, mijo? I don't know if I missed it. Have you ever tried futures? Yes, I have. Hi, okay, Hugh. When you look at charts, you're not looking at price, you're looking at mass human psychology. Well, think about it. Seriously, think about it. If I buy UNH at $298 per share, let's say I put $100,000 into it and I get 1%. 1% of $100,000 is $1,000. Well, let's say hypothetically, I'm looking at AT&T, and I put $100,000 in AT&T, and I get 1% on AT&T. Well, that's still 1%. Okay, the price to me is irrelevant. It's the motion of the ocean, because what goes up got to come down. Okay, spinning wheels got to go round. Stop all your troubles by the riverside. Ride a painted pony, make the spin. All right, anyway. Bring you back to the 60s. Holy cow. So he's right. I don't look at the price. I look at the movement of the stock. Does it look right? Because no matter what you're doing, no matter what playground you go anywhere in the world, a teeter-totter goes up, down, up, down, up, down. It doesn't matter. My eyes were wide open. It's like I went to I went to Russia. I flew to Russia once, to go check it out. And I got there, the trees looked the exact same. The grass looked the exact same. The cars, well, they looked at the buildings, everything. You can go anywhere in the world. Everything's very similar but different. But similar but different. So I said, anyway, here, we're looking for cash flow from our investments. So the way I look at it, I don't look at it as a stock and a price and going up and down. I look at it as a cash producing asset. I can't afford to buy the company, but I can afford to buy enough shares to create an entity that gives me a weekly cash flow. It's changing your perception of what you're doing. I don't really care if the stock goes up and down. I want to know what the cash flow is. Okay, what did I pay for the asset? Okay, so if I put 50 grand into this asset, it's going to give me $500 a week. I don't care what the price is. Think about it. If I put 50 grand into this, I'm looking for 1%. 1% of 50 grand is $500. So regardless of what the movement is, because they all move in relative, a $600 stock is going to make, $20, $30 moves every single day. A $20 stock is going to make a 50 to 60 cent move every day. It's all percentages. Okay, so I'm looking for 1%. So regardless of what the price is, I've never had anybody else call me out on that one, because I don't look at the price. I look at the motion of the ocean, of the waves, the movement. What are the buyers and sellers buying and selling? Are they consistent? Because they go up. Let's actually look at a few. Let's move this over. Okay, check that out. Look, it went up, it went down. It went up, it went down, it went up, it went down, it went up, it went down. You can look at any single stock and they're all going to do the exact same thing. Here, let's pull up Ford. Check that out. Okay? Down, up, down, up, down, up, down, up, down. The price is totally irrelevant because it goes down, it goes up, it goes down, it goes up. The only time where price comes into effect is when you're trying to figure out movement. Okay, if the bottom here is $10.40 and the top is $11.40, well, that's only a $1 move. But a $1 move on a $10 stock is 10%. So take a look at $1,000 share. $1,000. Oh, it drops 10%. It's the same thing. Okay, what percentage is it moving? Down 10%, up 10%. Down. Here's where it was. Here's where. Isaac, what's happening? Isaac, what's happening? All right, what do we got? What do we got? Alrighty. Cappy. Okay. Taking some else's idea. Okay. Mike, good evening. Al Calagon, the Black. Is not love not unlike the unlikely not? It is unliked to. Unlikened to. Okay, thank you for that. Totally off topic. The information, got it. What else do we have? Uh-oh. Maya's asking about rolling forward. I'm missing a lot of questions. I got to go backwards. All right, here we go. Here we go. Caught up. All right, information 45 here. Okay, haphazard 45 there. Not quite what that means. Okay, am broke. I have no idea what that means, broken English. Birdie, I'm pregnant. Call me now. Yeah, ain't gonna happen. Thoughts on waste management. Waste management is a monthly optionable stock and the numbers just don't work for me. Waste management. See this over here? 20 June, 18 July, 19 September, 17 October. That means it trades monthly. Okay, well, monthly, you can only do it once a month, 12 times a year. So what am I going to make? 12 to 24% a year? 24% might not be bad for some of you guys. but it doesn't work for me because I've been getting 1% every week. So why would I change? Okay, I grew up with a time frame where if it ain't broke, don't fix it. At what point are you okay with getting called on your shares? Rambone, it's always, always, always about the numbers. What did I buy it for? What did I sell? How much did I make? How many times have I consistently done this? What is my profit on that scenario? It's always going to be about the numbers. Okay? Safety and capital. Oh my goodness. Consistency of profitability and safety. Those are my two number ones. You run the wheel? No, I do not. Sybil, Delta. Gotta love Delta. Okay, that's another good one. Okay, broken English. I don't know what that word is. Happenstance. Insurhiscences. I have no idea. Gap. Sybil, gap. Okay. Broken English. That a dectogram. Delectating computer. Okay. What is rolling forward? Uh-oh. Maya. Okay. Rolling forward, you got to understand a covered call first. A covered call is when you buy a stock and you sell the option. So it's kind of like going to the store, Maya. I don't know if you're a girl or a guy. It's like going to the store, buying a, $700 Louis Vuitton pocketbook, and then getting one for your friend. 2.7 is what value? I appreciate you being here, seriously. 2.7, I'm assuming you're talking about the rate of return we came up with for United Airlines. Okay, so if we rate of return, and that rate of return was 2.7%. Okay, so whatever number I'm starting out with, at the end of the week, I now have an extra 2.7%. To what quarter of hectares? I have no idea what that means. Because I know what a hectare is. It's almost like an acre. Because, well, here we measure land by the acreage. Okay, in other parts of in Europe, it's by the hectares. So it's a different way of measuring. But I don't know what you're talking about. What the dividends on AAL? Don't know. I wasn't asking about the dividend. Somebody asked me to take a look at it, so I took a look at it. What's the value for math for the hectare value? 11.11. Okay, thank you. Ford is dropping, waiting for it to turn around. Steve Martinez, I'm doing the same thing. I keep my eye on Ford every once in a while. Okay? Because like 3 years ago, Ford was my go-to. I think it was Ford a couple of years ago. Last year, it was... No, Ford was 4 years ago. 3 years ago, it was Macy's. Last year, it was Walgreens. This year, so far, it looks like U.S. Steel. You need to have a loaner. You're absolutely right. I do. In business, who is your eye doctor? Ooh, I don't have an eye doctor. Wildcat. You need a technical or assistant loaner. Okay, thank you. This is fun for my mental. Okay. Follow the creator. Low it down for me. I have no idea what that means. Bitcoins. Nope. Can you sell you a dime coin? Nope, I don't buy any of those. Epic, how are you doing today? James Thomas, what stock is that? That right there is Waste Management. It's not determining to my budget. Okay. Comcast, ST77 wants to take a look at Comcast, CMCSA, Comcast. Check it out. The high, the low, where was it? Where is it? What direction? Up, down, sideways. Cool beans, right? All right, so we're at 34.63. The closest strike price is going to be the 35. And the 35 is going from 15 to 39. So we're going to say no because the number is just not good enough. Now I want 1%. 1% of 34.63 is going to be right around 35 cents. Well, this is only offering 15 cents, so that's a no. Sorry, Comcast is going to be a no. Rich Bruner, the Porsche is better anyway. Oh, Rich, holy cow, I haven't seen you and your wife in weeks. Hope everything's going well. All right, let's keep on. Jessica Ferreira, how are you today? Where can I learn more? Eric, I'm here every single night. I shouldn't say every single night. Last year it was every single night, 7 days a week. I missed 6 days last year. That was it. But this year I'm taking Friday nights and Saturday nights off. So Sunday, Monday, Tuesday, Wednesday, and Thursday night I'm here. All right. So you can ask any question you want, and I'm not going to charge you a thing. CD Blux Stacks. CD Blux Stacks. Oh, that reminds me of Dr. Seuss. 6 chicks with bricks come. 6 chicks with rocks come. 6 chicks bang and 6. Oh, I forget which one that was. I forget the name of it. Anyway, let's keep on going. Laugh. Okay. Marla Lewis. Coney, no. Sharing, okay. Can you check MBOT? I have no idea what Epic, MBOT, really? What is MBOT? It's a no is what it is. Can you check Coney for cash flow or dividends? Marla, good evening to you. Okay, Marla. Which one did you say? Coney. C-O-N-Y. Okay, Maria, you see this? 20 June, 18 July. That means it's a no. How did that get there? Okay. 20 June, 18 July, 17 October, 16 January. Those are months of the year. That means the options trade once a month. So it's a no. It's 2 decades of consistent profitability. Coney doesn't fit there either. And weekly options. Coney doesn't fit there either. You would have to give me for 2000. Check MBOT. We already checked MBOT. Alrighty. Okay. Okay, let's do this. All right, I have no idea what MBOT is. Too much patience. Hey, melatonin, I thought you were going to call me today or yesterday. Monica, you say up, down, daily, weekly, monthly, what chart? Oh. You can look at any chart. This here is an annual chart. Okay? Up, down, up, down, up, down, up, down. That's a 1-year chart. And this is looking at 3 months, 90 days. Doesn't really matter how much time you're looking for. It's always going up and down, up, down. Larry B, I love that question. Give me 1 second, I'll get to that one. Daniel, when you are looking at the premiums on there, do you only do the ones at the money? No, Daniel, it's always going to be about the numbers. First and foremost, it's got to be a good quality stock. Second, it's got to be the right time of year to buy it when the chart tells me. And then third, I will take a look at one strike in the money. I will take a look at the money. I don't like going out of the money because then the stock has to do something. I prefer it when a stock doesn't have to do anything. So at the money or in the money is what I prefer. I like safety over profitability. Okay, so when you get to this side, when you're retired, okay, cash flow is more important than possibility of future earnings. Okay, Daniel, look at the premium. Okay, got that one. Larry, how do I manage risk? Larry, you ready for this? Larry, this is for you and for you specifically, okay? When I say, I got 5 simple rules, Larry. Rule number 1, never buy something you do not want to own long term. Never buy something you do not understand. It. Rule number one is always, no matter how you look at it, never buy something you don't understand. Never buy something you don't want to hold on to long term. And never buy something that you're questioning yourself. So when you say manage risk, if you're thinking that you might risk or you might lose when you buy something, well, then you shouldn't be buying it. Plain and simple. Okay? Coca-Cola has been in business for over 100 years. General Motors, 100 years. Ford, 100 years. AT&T, more than 100. General Electric, 100 years. Ooh, Consolidated Edison, 200 years. Okay, Procter & Gamble, Colgate Palmolive, Clorox. These companies have been in business for over 100 years. If you think there's a possibility where you may be risking something, don't buy them. It's actually that simple. Stocks only do two things, Larry. They go up, and then they come down. And then they go up, and then they come down. That's all they do. Okay? If you buy the stock, understand that the high of the year can be easily buy a stock at $100 and it could drop down to 20. And hypothetically speaking, you should be perfectly okay with that. Because number one, rule number two, never sell for a loss. I don't use risk management because I don't buy something that I'm going to regret ever. Every time I buy something, I get some type of cash flow from it on a weekly basis. Every single week. Or I just... Maria, which stocks do you recommend with great dividends? Maria, are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 stocks I just gave you in those 5 lists. Okay, let's keep on keeping on. All gone. Oh no. Daniel, you're welcome. User 96183766948037. Good evening. Make sense, Larry? Outstanding. Okay, so let's see. How would your strategy be applied to Robinhood account holders? Ooh, I love Robinhood, and I do this in my... Now, I have 7 different accounts. Got 1 Robinhood account and 6 Thinkorswim. Okay? And I do use it in Robinhood. I love Robinhood. I can just sit anywhere. You'll see me at the beach trading. You'll see me in the mountains trading. You'll see me in the middle of the woods trading. Okay? I get that phone. I'll even stop off at a traffic light. Oh, let me do a quick trade. There you go. Right on my Robinhood account. It's simple. Fridays, I do it right at 11:30. I take a look at what my position is this week, and I see if rolling forward makes sense. If it does, just click, 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 roll it forward. Boom. Done. I love Robinhood. Simple, it's easy. NVIDIA just crushed their earnings. I don't care. I don't do NVIDIA, and I'm assuming you didn't read the numbers when you bought your NVIDIA shares. $130, they get a 4-cent dividend per year. 4 cents per year. Okay? So NVIDIA is one of those capital appreciation stocks. It's not a cash flow stock. It's not something I look for. Owen, good evening. Thank you. Owen, please only do it once. Carmen, good evening. Thank you. Vincent, how are you today? Kim, good evening. Carmen, good evening. Okay. Thank you for sharing the live. I'm going to be done here in 10 minutes, 10 to 15 minutes. You guys got to stop that, please. Owen, Kim, stop, please. All right. You guys got to stop that because I don't want to remove you. Dude, Adam, stop embarrassing yourself. Looks creepy as hell. Well, thank you for that, Adam. I can see why he's single. Huh? Whoever said I was single, Adam? Do you think liquidity is a major role to play in trading, and why? Oh, Mitchell, liquidity. Let me see if I can explain it to you this manner. Liquidity is kind of like going to a dance hall and you being the only person on the dance floor. How's that? Okay, liquidity. You want enough shares trading so there's always a way to get in and a way to get out. Okay, I like to have 1 million shares or more. Look at this one, 11 million shares are traded today. Well, that's plenty of liquidity, and it is very important. Hugh, Adam is the liquidity. As soon as you start to make sense, it cuts out. Oh, sorry about that. All right, let's keep on going. Dell 44, how you doing? Good evening. All right, so let's go to the next one. Next one on the list. Next one on the list. FICO. What the heck is FICO? FICO. No is what it is. FICO is a no. What's happening here? Same thing happening here. Having issues on YouTube. Don't know why. Next on the list, IWM. What the heck is IWM? IWM. Oh, yeah. A Russell ETF. Yeah, I don't do this one. Because iShares from BlackRock doesn't have dividends. At least I don't think they do. Wildcat, who's my eye doctor? I don't have an eye doctor. Showboys, AT&T. Hold on, we're looking at IWM. I don't know why I don't do ETFs. Let's go here. And let's put in IWM. IWM. And let's see what the numbers look like. LIF, Canman, Freehold Realty? What the heck is that? All right, here we go. I'm going to go back to 2005. Hold on. All right, let's go all the way back to 2005 and see how this thing increases its dividends every year, or if they do. All right, 2005, here we go right here. 2714, that's backwards already. Okay, you're starting out 20 years ago, going backwards. Okay, from 20 to 27, that's good. 27 to 14, that's not good. 19, 26, 16, that's backwards. 10, that's backwards. 23, 32, 15, 4, 15, 9. Okay. 26, 11, 25, 15, 36, 14. Yeah, I'm going to say no to this. I have no idea who came up with IWM. Let's do U.S. Steel. I love U.S. Steel. As a matter of fact, I actually own some U.S. Steel. Nope. Wasn't that quick? See that? That big, huge jump. Yeah, I don't want to jump into that. No, I do own some, but I'm not going to jump into some more, not after a jump like that. No, thank you. Canman, LIF. What the heck is LIF? LIF. Life 360 Equity Note. Okay? Okay, Canman, when I say 2 decades of profitability, I can understand how you overlook that one. But when I say weekly options and then you give me something like this, that's monthlies, dude. No, I don't do monthlies. The numbers don't work. Okay, Wildcat, I don't have one. Hope you're okay with that one. What about AT&T? Well, let's look at AT&T. Oh, interesting. Take a look. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement from 17 to 29. Well, that's a nice movement. We're currently at 27.50. The 27.50 is going for 42. That's over 1%. All right, so the chart looks okay. The numbers look okay. Well, now let's zoom in a little closer into the charts to see if it makes sense. year ago was the bottom of the year, 1705. The high of the year was a couple of weeks ago on the 2nd of April, and that was 2909. Well, look what happened. Down, up, down, up, down, up. You got your 2 days to the upside right there. Look at the motion. The last 30 days. Now, the last 30 days gives me a good idea of where do I think it's going next. Well, let's take a look. 30 days ago, we're at 27. Jumped up to 28.40 and dropped back down right at 20. It shoots back up to 28. No, not 28, 26. 26 to 28. Back down. Now we have our 2 days to the upside. Yesterday and today, both higher than last Friday. So, what does it look like? Well, let's take a look. The 27.50. 27.50. Here's Johnny. 25. That's next Friday. The 27.5 call option against the stock at the market to open. So here's my profit, $43. It's costing $2,700. What to make before I even do it? Well, right there, maximum profit. Okay, what is it going to cost me? Well, that's there too. Cost of the trade, including commissions and fees, $2,700. Well, I got this. Get my calculator. It's going to cost $2,707. That's a grand total of 1.6%. Now, I don't know about you, but 1.6% comes to over 75% per year. Well, that's not that bad if you think about it. All right, next. What program am I using? Edith Johnson, how are you today? Robert Wilson, how are you doing? Okay, Edith, the program that I'm using is called Think or Swim. It's through Charles Schwab. Okay, Charles Schwab has been around for a while. Crypto Crew, XRP. Now, I'm pretty sure, last time I checked, XRP is not 20 years old. Also, XRP, I don't even know if they have dividends. But no, XRP is a new company. I don't buy new companies because I'm not in that position. Will you ever say it's a yes from you? Well, of course I do. I say it all the time. I said yes to Apple. I said yes to Dow. I said yes to Devon Energy. Oh my goodness, it's all the questions. Sky Video. Goodbye. Have a lovely evening. What are you doing? Okay. Okay, cool beans. All right, all that being said, you're welcome there, Miss Edith. Let's move on to the next one on the list. Let's get out of here. All right. Next one on the list is going to be, Nextera Energy. Look at that. High, low is. Look at the motion. Down, up, down, up, down. Okay, 67.21. The 68s are going for 65 to 70. I'm going to say no. The reason I'm going to say no, it's less than 1%. I mean, think about it. If I'm buying it at 67.21 and I'm going to sell it for 68, it's only going to give me 65 cents a share. Now, 65 cents a share on a $68 stock is less than 1%. Show boys, Amazon does not have dividends. Okay, I think that was one of the very first thing I said. Dividend Stock Talk. That's the name of the show. Dividend Stock Talk. Okay, Amazon is not profitable, number one. Number two, they don't have dividends. And number three, it's no. And it's over $250. Elder, is that right? Can your strategy be used on Robinhood with the margins they give you? Yep, you can. It's a little challenging because you got to make sure when you have a margin account with Robinhood, Yeah, they won't let you do certain trades if you don't have enough money. What really frustrates me is they'll let me buy 400 or 500 shares of a company, but they won't let me sell covered calls on them unless I have a nice big fat margin cushion. I hate that. Do I drip badly, Bradley? No. I usually I don't even look for the dividends. Okay, I use dividend stocks to do my strategy. But yeah, I'll take the dividends and I'll reinvest them. That's what you mean. And no, I don't do NVIDIA, because if you seriously looked at NVIDIA for a long-term play, you wouldn't do it either. Take a look at the numbers. How consistently profitable are they? What are their dividends looking like? They have a 4-cent dividend. Yesterday it was $132. It was a 4-cent dividend. 4 cents on a $132 stock is like 0.03. The Guardian, am I sleepy? I'll get plenty of sleep when I'm dead. Don't worry about me, but I appreciate it. Showboys, New York Stock Exchange. Oh, Realty? Oh, hell no. Okay, Oh, Realty, as you'll notice, is a monthly optionable stock. 20 June, 18 July, 19 September, 19 December. Those are months of the year, Showboys. Okay, months of the year. It means that's only 12 times a year I can trade that stock on that option. Thoughts on VRT? Ooh, VRT. Isn't that Vertis? What is that? Oh, Vertiv. Oh, I thought it was Vertis, but Vertiv. All right, anyway, look at it. High, low, is, look at it, down, up, down, up. Okay, great. Well, let's take a gander at it. Well, it looks like it's going to be a no, only because, check this out, your 30-day bottom right here, your 30-day top right there. I don't buy at the 30-day top. It just doesn't make sense for me. Because you have people who bought it down here in the 60s are now looking at it at 109. It's a $40 increase. That's a $40 increase from here to here. On a $60 stock, that's over 66%. Well, a 66% in 1 month, if you don't take your profits, then you deserve to lose them. That's just my opinion. Sick humor. Okay? A profit's not a profit until you take it. If you don't take your profit, you have no one else to blame but yourself. All right, that was VRT. That's going to be a no for this week for me. Okay, Showboys, DVN, Devon Energy. Now, I do have some Devon Energy, and Devon Energy does have the dividend coming up. The high or the low, where was it? Where is it? Look at the motion. Down, sideways, down, up. Okay. We're currently at 31.05. The 31s are going for 75 cents. That's more than 2.5%. Well, let's take a look. Is it the right time to buy? Because what's going on here? Now, I'm not really worried about what happened last year, but it does give me an idea of what it's doing, because it's already lost about 50% of its value. Because a year ago, we're up just under 50, and then she drops just below 26. That's almost a 50% drop, almost. Okay, but let's take a little bit closer look. Sybil, we'll take a look at Gap next. Okay, thoughts on GLD, haphazard, we'll take a look at that also. Does liquidity play a major role in trading? Yes and no. Mitchell, yes and no. Have you done Pepsi? Yes, we done Pepsi earlier. Okay, a year ago, we're at 48.56. We topped out at 49.53. Hogan, Mara, we'll take a look at it. Our bottom is right here. At the beginning of April, 25.84. That's almost a 50% drop. Look at what she did. Up, down, up, down. Now we have 2 days to the upside right there. So there is a possibility of this thing going up. Now, I do own some Devon Energy. I think I bought some this morning, just for the fun of it. Last 30 days, here we go. Okay, down, up, down, up. It's easy to see. But let's take a look. What does Devon Energy usually do this time of year? Now, it's not guaranteed, but it just gives us a rough idea. Okay, now that's pretty plain to see. Okay, she goes up nicely for the next couple of weeks. So why not? Think about it. Why not? Do you like Devon Energy? It's not that difficult of a question. Okay, so 31. Now let's take a look at the 31. Covered call at the 31. There we go. One contract. Too many clicks. Here we go. Buy one covered call, Devon Energy, 100, 6 June 25 is the profit asset for $3,000 that gives you $90 a week. Hypothetically, numbers are going to change every week. Out the numbers. Calculator, there we go. Costing $3,010. Comes to a grand total of I got to write that one down. 3%. Holy cow. All right. That's Devon Energy. So the question should be, do you like Devon Energy? Does it make sense? Is it a company you're willing to buy and hold on to it, regardless if it goes up or if it goes down? It's already gotten down. Let's get out of here. Back to that chart so I can show you what I'm talking about. Okay, so here's one of the reasons Main, M-A-I-N, yeah, no. Main is a monthly, it's going to be a no. Sorry, show boys. Devon Energy, and this is one of the reasons why I look at the 1 year chart first. Okay, look at the 1 year chart first to see the highs at $50. And that was about a year ago. Now it's dropped. Ooh, check that out. Woohoo! Okay, it's dropped about 50% already. Look at another one. Okay, it's already lost 50% of its value. Okay, you make your money buying low, right here, April, and selling high. Well, you can't get much lower than the low of the year, and that was last month. 7 fan and the fan club. I have no idea what that means. Show boys, Maine, it's a monthly. It's going to be a no. So when do you let it expire and when do you roll? Okay, Steve, I think we already talked about this earlier. Okay. I have a morning trading group. We trade every morning. All right. And I get the question a lot. Well, when do you roll? When do you do this? When do you do that? It's always going to be about the numbers. What did I buy it for? What is it at now? What option did I sell? Is it at risk of me losing? These are all questions that come into mind. Showboy, do you even know any of these things that you're asking me to take a look at? Because I told you I want two criteria, and only two. Consistency of profitability and weekly options. Maine doesn't have it. Stag doesn't have it. And the last one you asked me doesn't have it. So my question to you is, do you know what it is you're buying? And if you don't know what you're buying, why are you asking me? Okay, I only have two criteria. Consistency of profitability, 20 years, and weekly options. And every time you've given, everyone you've given me so far is, I think maybe one you gave me was halfway decent. All right, so let's take a look at Devon Energy. Okay, so here's the bottom here on the 9th. Okay, here's the bottom. That's the bottom of the 30-day period. Then she shoots up. Here's the high. Well, what happens from the bottom to the top? Well, there's usually profit taking. Here it is right here. It went from 35 to $30.50. So that's like a $4 or $5 drop. That's more than 10% drop. Well, now she got 2 days to the upside. Does it make sense to do Devon Energy? That's a question only you can answer. Okay, so I'm going to do one more for Sybil. She wants to take a look at the gap. She did ask me earlier. That's going to be the last one for the evening. G-A-P-A. Nope. Sorry. Wasn't that horrible? The very last one of the day, like 2 seconds. Nope. See where the high was a couple of days ago? Now 3 days to the downside. Look at all this space. Prime real estate to be taken away for profits. Yeah, no. All right, so that's it. Let's finish up with the questions, and then I will be done. Oh, good morning from Germany. Guten Hagen. I think that's right. Is that right? Guten Hagen. Anyway. Franco Mero. Okay, I have no idea why you even asked me why you're saying that, but okay. Can I get reasons backing up your yes and no? Mitchell, what is my yes and no that you want me to question before I call it a day? All right, Mitchell, does liquidity play a major role in trading? Yes, it does. I already said that. What was your other question? Oh, don't have another question, Mitchell. Mrs. Mighty G. Okay, Mrs. Mighty G, I don't do Tesla. I only do stocks that are profitable and share their profits. Okay, Tesla is one of those capital growth stocks where you buy it and just watch it going higher and higher. I don't do those. Geeka Mango, what is the next move in the... Okay. Guten Morgen. Okay, I got it right. All right, so back to TikTok. What we have here, Stag's going to be a no. I already know that one. Yeah. Len. GID, no idea. Fangs and no, that much I know. PBG. Make money while you sleep. Absolutely, Bradley. Love that idea. Sybil, Gap. We just looked at the Gap. GLD, Devon Energy has been down. 125.10. Okay. Devon Energy has been down year over year. I got it. Okay, got it. Okay, even though the price goes up, why don't you purchase Tesla? Well, because Tesla does not have dividends. Now, the name of the the name of the show is Dividend Stock Talk. Dividend investing for weekly cash flow. Now, there's a reason why I use dividend stocks, because they have consistency. Okay? They have predictability. All right? And they have profitability. See, so Tesla doesn't have any dividends, which means all the profits Tesla makes puts it back into the company for capital growth. I'm not looking for capital growth. I'm looking for cash flow. It just doesn't fit. Okay. Zanatti, sorry if this is a basic question, but how do you define a profit and how should you take your profit? For example, if I buy an asset for 100 and now it's worth 150, should I sell all, buy later? Oh, okay. So Zanatti, here's the way I look at it. Okay? Now, specifically, I'm looking for weekly cash flow. So if I buy something and it goes up, I'm going to take the profit, because it's not a profit until you take it. Just because you bought it at 100 and now it's worth 150, it doesn't mean anything until you take that profit, which means you have to sell it to have that money back in your hands. Then it becomes a profit. With it just being on paper, it's called a paper profit. It's not real. It's not real until you take it. Okay? Same thing with a loss. It's not a loss until you agree to take a loss. So if you buy it at 100 and it drops to 50, it's not a loss until you actually step up and say, you know what, it went down, let me sell it, let me take the loss. So you're accepting that loss. Okay, if I bought Harley Davidson at 35 back in October. Well, it's down at 23. I have no desire whatsoever to sell at a loss. I will hold it until the day I die, but every single week I write a covered call against my Harley Davidson and I bring in some cash flow against it. All right, what question do we have now? The dividend money, the dividend money flow thing you talk about. Okay. Can you explain what you said like I'm a 5-year-old? I'm not quite sure specifically what you're saying when I said. Now, the trading strategy I'm showing you was created for a 9-year-old. Okay? Stocks go up, stocks go down. Stocks go up, stocks go down. Buying it at the right price if it is a good company and everything fits. Okay, number one, it's got to be a good company. Okay? It's got to be profitable. it's got to have weekly options. If everything falls in line, great. Now I want to look at the chart. I want to buy it not when it's at the bottom. When it hits a bottom, bounces, and then starts going back up again. This is where I want to jump in after the bottom, because you have no idea how long it's going to stay there until it starts to move up. And then when it gets to a certain height, I want to take my profits at 1 or 2%, because I'm looking for 1% every single week. 1, 2, 3, 4, 5. 5 weeks. All right. Michael Anthony. CLOV should rebound, being at support. The company also raised its full year 20. Zanatti, thank you. Support. What about fundamental analysis? Well, I love fundamental analysis. Fundamental analysis gets you 10,000 stocks, but only 300 met the fundamental analysis that I required. Revolving door, and trade them when the time is right. It's like you never pick fruit until it's ripe. So I'm not going to take profits until it's done. What do you think of dividend index funds? Thanks, I'm new. Paris Fisher, PGA. I have no idea what PGA means. But, okay, what is the name of that? Okay, Dika Magu, I have no idea what you mean by that. All right, so what do we have? Google. Seriously, go to Google, and in the Google search, Dividend Kings List 2025. Dividend N-O-H-I. Ugh, Bob, I feel bad for you. But I'm sure you have a different strategy than I do, because I wouldn't buy Misty and I wouldn't buy OHI either. It doesn't fit what I'm doing. Where is now? I have no idea what that means. I mean, I know what it means, but in the context of what we're talking about, where is... So, that's all the questions? Awesome. So we're going to call it a night. You guys over here in the Zoom class, catch you guys later. Peace on. And you guys here on Instagram, catch you guys tomorrow also.